Good morning, everybody, and this is your S&P 500 day trade setups for today. So the confusion continues, and to be honest, this burnt me yesterday. Uh, got the break of the wedge, what we're looking for, and was anticipating a move, a pretty strong move, and that didn't materialize. Got stopped out pretty quickly, but we'll get down to that on the lower time frame. For me at the moment, this is still confusion. We're still pretty much inside the wedge. This was the fake out of the wedge, and now we've got this inside range bar here, another inside range bar. So that is just confusion. Nothing really indicating anything. But what is brewing on the 3 hour is a story of three tops. And for me, story of three tops is three tails at a level, sort of one after each other. Not going to go into the history. You can actually just go look through the charts and you'll see often when you get story of three, the number three is based on, was what the strategy has always been based on as well. It's just, it works. So go back and have a look and you'll see what I mean. Okay, we've done the 8 size. Let's just get down to the lower time frames. Have a look at the 3 hour, look at this big range bar, and then another, let's just call it a wide bodied range bar, but there's tail to the upside, tail to the downside. Proper rejection. Here was my signal bar before the data. Nice 3 hour break above the flag and a close. So that, in my eyes, validates a potential move to the upside. Moving averages, we're above the moving averages in the upward trend. So everything here is indicating we should still be looking for a move to the upside. We start getting down to the hour, and pretty much the same is happening here. But you see hourly breaks above there, waiting for the data, and then we had an entry in here on the 5 minutes, which I'll get to now. But big down, big up, big down again in the moving averages. This is screaming at you, stay away, sit on the sidelines, don't get bothered with this. Okay, so you can see here was my pin bar, here was a confirmation bar. So took the trade here, fairly small position, big wide stop loss, so 400 odd point stop loss. But based on what we were seeing there without this picture, it was a fairly decent relatively high risk trade, but on a small position size, low risk. And you can see we got going, really looking good. Walked away from the charts, came back to a stop right there. Anyway. Typical of what happens when there's data, which is why I normally don't trade it, but with that big break, it was just too juicy to give up. And you can see the 5 minutes here, fairly decent opportunity, but so be it. Anyway, what is it today? Today I am probably licking my wounds, but I'm concerned of this volatility that we saw yesterday. And there is more data coming out today and tomorrow in actual fact. So I think it'd probably be safer just to wait for a proper 8 hour close above this flag before looking for a move to the upside. And at the moment, if you look at this volatility we've got here, there's no structure. I'm not really interested in jumping in short in this zone either, because you're probably going to get held up here again at 4100 or 41.3. So we're still stuck between this 4100 and 4150 area, and I don't see anything here that is indicating long or short right now. Probably more favoring a move to the bottom of the flag, to be in all honesty. But then I want to see a break and retest of 4100. Get below 4100 and retest it. That would open up that move to the downside. At the moment, I think we're just treading water. Nobody knows what's going on, and that's clear by what you can see of the price action yesterday. So that's kind of my view at the moment. It's really just sit back and wait for something to transpire here. It's still a bull flag. There's no two ways about it. We're still in an uptrend, but we're in an area of extreme resistance, and you can see what happened in 2021, and we did find support here in 2022, and we did have a rejection going into the close in 2022, and now we're back in this zone again. So the logic is it should move to the downside. The other thing that you need to bear in mind is remember this area here is this big cup and handle. So that's the neckline for here's your cup and here's your handle. So a break, a weekly close above 41.50 was the only thing that's going to trigger this move to the upside. A weekly close here in this area we are, it's a story of threes, but then we still need to drop below the low of the weeks in order to trigger a short, and that's pretty much down there. So that would be 40.50. Extremely volatile, as you can see. The swings are relatively large at the moment, so I'm very cautious right now. I don't think I want to be second guessing this. So I'll be sitting on the sidelines. And then the last bit of information here is Euro USD. If you didn't watch the video, just come to Euro USD and you see there is a big bear flag there with some rejection and continuation. If we keep moving to the downside here, that validates that bear flag, which is a pretty big bear flag to the downside. And that means dollar strength. Dollar strength is not good for the S&P. So dollar strength would push this market down. So that would take us to the bottom of this flag again. And then we can start reevaluating what's on offer. But for now, I think I'll just wait for all the data to come out and then we can look at it. So I'm sitting on the sides again. Seems to be a lot of sitting on the sides this year so far. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.